Software company MicroStrategy has had an incredible 12 months. Over the past year, the stock has increased in value by 465%. And based on the number of shares outstanding, the company's market value is now $33.6 billion. Software revenue over the last 12 months for MicroStrategy comes to $500 million, with $429 million of net income. However, net income was impacted by a one-off tax benefit. Operating income last year was actually negative $45 million and free cash flow was only $10 million. And since the company's software revenue hasn't grown in over 10 years, the question is, why does the company command such a high valuation? The answer is that in 2020, MicroStrategy embarked on a new strategy where it would use company funds to accumulate Bitcoin. And based on latest company filings, the company now owns 214,246 Bitcoins. So at the current Bitcoin price, just under 66,000, the stash is worth just over $14 billion. And incredibly, since Bitcoin production is capped at 21 million, the company now owns more than 1% of all the Bitcoin that will ever be mined. Yet MicroStrategy's valuation still implies a major disconnect, because if the company's bitcoins are worth 14 billion, that implies the software business is worth almost 20 billion, or 40 times sales. That valuation doesn't make sense considering the software business has shown little growth. Even if Bitcoin was trading at $100,000, the company's market cap still wouldn't make much sense. Another explanation, though, is that investors are willing to pay MicroStrategy a premium for its skill in capital allocation. Over the past few years, CEO Michael Saylor has used cash flow, debt, and equity offerings to buy more Bitcoin, and this added leverage has helped the stock to generate larger returns than Bitcoin itself. For example, since July 2020, Bitcoin has gone up 500%, while MicroStrategy has gained over 1,200%. Just last month, the company raised more debt to buy another 9,000 Bitcoins. However, there are more than a few problems with this approach. Raising equity dilutes shareholders and debt introduces risk. Leverage works wonderfully to amplify gains while Bitcoin is going up, but when Bitcoin goes down, the reverse occurs. Also important is that the market for Bitcoin has changed dramatically over the last few years. Multiple Bitcoin ETFs are now on the market after their approval in January, so investors have many options to buy Bitcoin directly, and those looking for leverage can buy an ETF like BitX. BitX offers 2 times leverage and already has more than $1.5 billion of assets. In other words, while Bitcoin ETFs exist, there appears little reason to pay such a large premium for MicroStrategy stock. That doesn't mean the stock can't continue higher, but it looks like a highly speculative play. But these are my personal opinions, not financial advice, and I hold no position in MicroStrategy. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.